Okay, everybody, it is the 1st of July, and I'm in a different classroom. I'm down at Glenwood Center. If you want to stop by, I'm going to be here for a few hours recording this, and I'm up in room 310. This is actually a better room for me because it's got the Superior Smartboard, which nonetheless, they all work. They all work really well. But this one's a little bit better. I'm going to zoom over there a little bit more. So maybe you'll get me in the picture. I thought that camera was going to follow me around. I guess not. Maybe it will. Let me look in here. Anyway, a lot going on. I know. The idea being that I'm going to give 2 lectures, one on, there it goes, I got it going. One on chapter 6, which is cash, and then chapter 7, which is, I don't remember. But both of them, I may do one then one, but I need this room, so I may do them both today in order to get them to you. And then maybe do a YouTube and go over some problems in the interim. But I want to get these out of the way. Just as an aside, and you can look or fast forward through it if you want. This morning or yesterday morning, why do we do this? You know, again, I mean, why do you take accounting? Why does it matter? Well, I'm a finance guy, right? And so I come from what we call the buy side. Why do we call it the buy side of a transaction or a sell side? Well, the buy side of a transaction means I'm looking to buy any one of these stocks. This is a cool little graphic right here that shows you what's up and what's down today. And this is I use this financial visualizations is the name of this website. And I like this website. I just used it for years. You know, it's all what you get used to. But as you can see, it's got some neat features, but you can see these green ones mean that they're up today. Google, Oracle, NVIDIA. That means Amazon, it looks like it's down a little bit. Tesla down a little bit. This home improvement up. And it's done by sectors. We call these sectors of the economy or sectors of business, communication services, healthcare. Now, here, that gives me all these top gainers and top ones that have moved significantly today. So the buy side of accounting, what I consider the buy side of accounting is the analysis that it takes for me to invest in companies in equities. And as you know, are stocks, equities, stocks in a company, ownership, equity ownership. Remember our first transaction of the year, we had cash and common stock, right? We would debit cash 30,000. It was Chaz who's starting this, and we would credit common stock 30,000 plus credit, debit plus, right? That's the beginnings of the understanding of the balance sheet. My ownership in the company equals the amount of cash and other assets I have on the other balance sheet. So this gives us our equation: assets equals liabilities plus owner's equity, right? These have to be equal. Hence the balance sheet: assets on one side, liabilities and owner's equity on the other. So I thought I'd use this one example of a stock I bought yesterday that showed up. I used a stock screener like this. This screens out stocks by different descriptive, fundamental, technical attributes, descriptions of those stocks. So what I did was I was interested in a stock that would fit my criteria, and my criteria for a trader is I wanted to move pretty quickly. And one of the things that I use is, when are its earnings coming out? Well, earnings date yesterday, but I can do today before market, tomorrow, and it'll screen them out. Now, look at here, there's 8,000 stocks, 8,200 stocks in this screener. Those are all publicly traded companies that you can buy ownership in. So I go earnings date, and I'll look at them, let's say previous 5 days, and it's going to give me, look what it did. It changed from 8,000 to 37. There's 37 stocks that are reporting their earnings. Now, what does that mean to us? In the first 4, 5, 6 weeks of accounting, what that means to us is they completed the accounting cycle, and now they're reporting in the form of and these are government designations, 10Q or 10K. This is quarterly, and this is annual. 10Q, 10K. They've been the same forever, since 1934, since FDR and the New Deal. That terrible happening, in my opinion, move towards a more socialist or a command and control type of economy began in earnest during the New Deal. Be that as it may, you may not agree or not agree with that idea, but I urge you to look at the history. If you're interested in the history of the Great Depression and the New Deal, Amity Shlaes, Schlaes, is one of my favorite writers, and she's more of a journalist, but she's an economist as well. Married to Seth Lipsky, by the way, who sort of lives in her shadow because he's a newspaper man, but Amity Shlaes is one of the best writers I've ever seen on economics, and she wrote a book called The Forgotten Man. I think I need 2 T's there. Forgotten Man, and it's a story, a nonfiction account of the Great Depression, the first Great Depression, you might call it. So if you're interested in that subject, Amity is the way to go. She also written several books, one on Calvin Coolidge, and she's the president of the Coolidge Library, as a matter of fact. So anyway, back to our screener. Now, I was looking at all these companies, and I have certain other criteria that I need, and one of them is I like to look at prices that are low. So I'll go to price, and I'll say I want a stock that's under $20 because I can buy more of it and take advantage of movements better. If you do a little math in your head, you'll understand what I'm talking about. But here's the one that I focused on, POWW. The company, and I almost want to move me somewhere, but I guess can I do that? No. Nope. But POWW, when you click on it, it gives you the full screen here, and this is the chart. Each one of these, we call these candlesticks. This is a method of charting. Each one of those is 1 day. Right, so here's December, here's January of 2021, February, March, right, all the way, here we are, July 1st, right, it's down 13 cents on July 1st. Well, I bought it yesterday, and I paid this price, $8.50. I can't remember what I paid, $8.53, I think, because I knew that their earnings were coming out. And so what did I do? I did some accounting research. I looked at the stock fit my criteria in price, and I thought that the trend is your friend, and I thought that this trend might continue upward. Is it a company that I wanted to own? I started to do what is called, this is technical analysis. Technicians, we call these types of market analysis technical analysis. Technicians do it. They look at charts and patterns, and it's like voodoo almost. It's very interesting, but it has sound mathematical resources to tell you what sort of price action is going to go. You'll learn all that in finance if you take Fin 325. Right? Take Intro to Finance with me, or someone who knows what they're doing. But then there's another type of analysis, which is what we're going to do, which is fundamental analysis, the fundamentals of the company. Well, what are the fundamentals of the company? Well, they make ammunition. Now, if you're of a certain ilk, you may look at a company that makes ammunition and dismiss them immediately. I don't want to be involved in that type of company. Good on you. I don't have that feeling. I'm very anti-war. And they are involved in the defense industry, which I don't wholly agree with on a moral basis. But nonetheless, they make bullets. They make ammunition. So look at here. They have no price per earnings. Why? Well, they lost money last quarter, right? And the new information isn't up yet. But they lost money last quarter, which is deeply concerning. Immediately, they lost 25 cents, 25, and we put the cents here, right, per share. So for every share, 53.82 million shares of that stock, certificates that you can own a piece of this company, for every share outstanding, they lost a quarter. They lost a quarter, or 0.25. That's bad. That if you do the math, that ends up being $11.8 million that they lost on that quarter. So why would I buy it? Why the hell would I buy it? Well, I had an idea, and this is where I started. I started looking at, this is an algorithm that just looks for the name of that company in all the different trade magazines and things, periodicals and online, websites and everything, and it just puts it here. Well, look, they got a Department of Defense contract. They're joining the Russell 2000, which is an index. That's kind of bullish. They're building a new state-of-the-art ammunition manufacturing plant in Wisconsin, of all places. But nonetheless, the only reason I say that, not because I don't like Wisconsin, it's just cold up there. So you might think, well, gee, why would you do that? You got to pay for heat in the plant. But they did. Maybe they're from there or something. So they also bought this company called Gunbroker. I happen to be a gun enthusiast, if you will. I'm a collector of old West guns and things like that. So I know what Gunbroker is. So I felt comfortable. I know what ammunition is. I know what guns are. So I felt comfortable on a personal level with the investment. And that's important. Buy what you know. I also know that there's a severe shortage of ammunition out there right now. And it's really, I mean, really severe. And people are paying crazy prices for ammunition. So that drove my thinking, even before I started to study what was going on. Now, and I'll wrap this up because I don't want to spend too much time before I get into the lecture. And you can fast forward through my BS. But anyway, it looked like to me when I went down here to the, it looked like to me, and through all of the reading that I did, that they were going to actually turn the corner and make money this quarter. So I was betting on a pop upward movement in the stock because of their increased earnings. And I was right for once. Yeah, I'm right a lot. I'm right more than I'm wrong, thankfully. But nonetheless, look at, they went from minus 368 of gross profit. Remember what gross profit was? Yeah, everybody remembers that, I'm sure, right? You had sales minus COGS, cost of goods sold, gives you gross profit. And then we subtract minus expenses, gives us net income. That's the basics of an income statement, right? Pretty simple. One of our 4 financial statements. So here it is. Here's net income. All the way, this last time they lost that $11,800,000, but their gross profit was rising rapidly. So was it a matter of getting their expenses down? I don't know. I dug into it pretty deeply and I don't remember offhand, but neither here nor there. I thought they were going to make money and they did. So, right, design, this is a little, if you're writing a paper, you might want to put this in the introduction. Designs, develops, manufactures, markets, and sells ammunition and ammunition component products. Handguns, long guns, right? That's what I wanted to know. Sounds like a good idea, unless you hate guns, and then you might stay away from it. I don't know. But that's neither here nor there. We're in the investing business. We need return, seeking alpha. So they only have 93 employees. Their sales are 43 million. Boy, that's pretty good. Look at this. Quick ratio. They have $1.90 in cash for every dollar in liabilities. We like that, right? We know that ratio from past. Their current ratio, even higher at 260. Their debt to equity is less than $1, right? That's what we like. And the long-term debt is less than 18 cents, right? Per dollar, right? $1 of equity. So the company looked good to me. It looked good. I bought it yesterday in the morning, and I paid a decent price for it. But it's up. I bought 5,000 shares. I bought 5,000 shares, which was somewhere around $42,000. All right. Even the stock is down 6 cents today. I'm up around, I don't know, $6,800. So that trade, that'll pay all the bills this month for Kelly and I. That'll pay the rent on the apartment and the rent on the garage. Our rent is $5,000, then we have another $1,800 to mess around with. That'll pay it. Now, of course, I owe taxes on this. This will be a capital gain. And I'll pay 28%. So about a third of that goes away. So you can see I need to make more than that this month just to make everything work. But nonetheless, you know, because Uncle Sam is always your partner when you're making money. They don't, well, these days maybe they're a partner when you're losing money too. I don't know. Anyway, that was the trade. And I just want to show you, if you were doing the research on the company, you would go to AMO, and what was it? POWW, AMO Inc. Strengths even ammo, stock price, AMO Inc. About AMO Inc. There they are, right? AMO Incorporated. There's media, and look up here. I need a new color. Here's investor relations. So you click on that, and you would go to, here they are. This is their financial statements, right? 16, 17, 18. And we would look for, oh God, look at all these AKs. Well, let's narrow it down. Investor relation, investor presentation, code of conduct, compensation, auto. Yeah, that's good. It's all good stuff. But I want their financial statements for this year. And so let's go down here. 6/29/21 10K. 6/29/21 8K. Let's look at their 10K. So here's their 10K. Now you can see they all look the same. Due to the 1934 Act, and this is securities. The 1934 Act created the Securities and Exchange Commission because this legislation came around. You know how slow they are in Washington. This was due to the 1929 market collapse, right? Stock market collapse, right? Yeah, call it, right? Black Tuesday. So AMO Inc., right? Section 13 or 15D of the Securities and Exchange Act of 1934. Okay, that's where all this comes from. And for you and I, they're incorporated in Delaware like most companies. Look at here. Properties, financial statements, item 8. Okay? Controls and procedures, it'll tell you all kinds of different stuff. And then it gets to the financial statements, I hope. There they are. Partial, summary compensation. This is what people are making, which is a matter of public view. Let me see here. Here we are. Here's the notes. Oh, here we go. Here's the balance sheet, right? Look at assets, liabilities, and equity, right? And we're going to see if they equal. Yes, they do. And you can look and see, as of 2021, this is comparación, right? Comparison of March 31st of 2020. They had 884, this is in millions. Okay, it should say in millions. Does that mean they went from 884 million to 118 billion? No, I would say that 884,000 and they went to 118 million. So they're not that big a company. So they ended up with 179 million in total assets. But let's go to their net income, which is what I did. I didn't look at this. I looked at their net income on the internet, so that it was provided by the internet. So you can read through this, and every publicly traded company, this is available for. So their net income or loss, and loss per share, net loss is 7 million, right? For the year last year. But if we looked at their 10Q, you can see that they had, and let's go back. And you could go to their 10K, 8K, 8K, 6/29/21, No, they didn't do it quarterly. Okay. Well, you should be able to find that somewhere. 8K, 16, and you can tell how much they made, and what their expenses were, et cetera, et cetera. Okay, so that's just a little story, and it should. The reason for the little story is maybe it ties together some of the things you're learning. Right? That's the point of this. Not that you're going to be some stock investor or whatever, but you should be able to throw this jargon around and start to put it together in your head that this is what we're trying to do. For a guy like me, I'm trying to examine financial statements in order to get a leg up on the competition and figure out where sources of value are, like ammo, right? I want to be the guy that finds out first that they're doing a better job than the market thinks they're doing, so that I can leverage that knowledge and make this $6,000, right? So how long did it take me? I don't know. I probably spent 4 or 5 hours digging around in that stock till I was sure. But I'm really good at doing the research. I'm really good at being efficient at doing research, so it comes pretty easily to me. I've been doing it for a long time. Doesn't mean I'm any better than you. It just means that I've got these systems down in my head, and I know where to go, and I know I like this, this format, and this website, and I have other websites that I use, TradingView that you've seen. Okay, now I'm going to go through this. I think I have it up. There it is. This is pretty quick. There's 53 slides. We'll do them as quickly as possible, and then I will go into chapter 7. And it's from the beginning. Cash fraud and internal controls. It's one of the easier chapters, I should say. I'm going to use the black one. Without further ado. Now, this is an area that you're going to be able to leverage as someone who's new in a field. That won't move around. I keep thinking I can move that square around. But when you go to a job and you're a first-year accountant, I hope, if that's your passion, but even if you're not, and you have some knowledge of accounting, you can generally look at these concepts and corporate governance and internal controls, and you could find some flaws, in a company and go, hey, it's one of those things you can go to your boss almost immediately and go, I was looking over our systems, and here's where I find a weakness. And if they're worth their salt, if you kept to me with that, I'm going to go, yeah, I know. I'm glad you brought it up. Let's see what we can do with our procedures to take care of it. So, cash and cash equivalents, how to report them, days sales uncollected, right? This is a biggie. And this is this word liquidity. What does liquidity mean? Can I pay my bills? Can I pay the bills, right? This is the acid test ratio. How liquid are we, right? Internal controls on cash receipts, petty cash fund transactions, and a bank reconciliation. This is your homework. Petty cash and bank reconciliation. They want you to know how to do that. What's an internal control? What are the purpose and the principal, PLE, right? I'm a principal in my PAL, principal in my company. I'm one of the founders. I'm the CEO, right? So I'm a principal in the company. Your kids have a principal at their school, PAL. Principle, PLE, is like honesty is a principle to live by. Integrity, right? That sort of thing. Internal controls used to monitor and control business activities includes the policies and procedures used to protect assets. This is a big one. Ensure reliable accounting, right? Right? SISO, CISO. What's that? Shit in, shit out. You don't want to be in that accounting or budgeting office where where you get the budget or the accounting, the financial statements, you're like, I don't trust these. I don't trust them. There's a crooked E, Enron, right? Look that up. Uphold company policies, promote efficient operations, of course. Sarbanes-Oxley, here's where they call this SOX. This is where your professor wildly disagrees with the book and the teaching of today. I want you to remember this word, heterodoxy. We had a neat discussion the other night with a few students about heterodoxy, and heterodoxy means I bring you information. I'm not trying to tell you how to think. Well, yeah, I am. I'm trying to tell you how to think critically so you can sort through my biases and come to your own conclusions about whatever subject I'm trying to present. And I try to present both sides of things, but again, I'm a libertarian, and here I am. I can't. I don't think that you can legislate. Here's the question: can you legislate behavior? This is a $20 question, and you can steel man this argument by saying, well, of course, if you put enough taxes on smoking, nobody will smoke again. So in a way, you legislated behavior. Yeah, it's a carrot and a stick. But Sarbanes-Oxley required managers and auditors of public companies to document and certify the system of internal controls. This came after a list of, is this 202, 2002, Enron, WorldCom, other Tyco, there's a number of big, grandiose accounting failures, frauds. But I want you to remember something about business. You've been indoctrinated and pounded. I watch what my kid watches, and every time they show a business person as a villain, I told her, business people aren't villains, Alice. They love you, and they want to sell you a product that you love. We're in the business school to build something called value. And the capitalist system is about loving your neighbor. That's what it's about. And if you can disagree and say capitalism is evil and all that, and we could have that debate if you'd like, but that's my take on how capitalism works. And capitalism was Karl Marx's term for it. I'd rather you used free markets. Free markets are about creating value. If you don't create value, you're not going to get rich, right? If that's your goal, and I don't think that's a very healthy goal, but whatever you want to do. Usually, I was talking with a former student yesterday, usually money comes along when you're doing the right thing and doing it well. So, can you legislate behavior because of these? The way a libertarian looks at government, they rush in to solve problems that don't need solving. That's how I look at government in a lot of ways. What was the best way to adjudicate COVID? Do nothing. Let people work it out. That may sound just astounding to you, but a scant 100 years ago, which is a very short period of time, they do nothing. You make some suggestions and say, maybe you ought to wear a mask, maybe you should, we're not sure, things like that. So the market takes care of these Enron, WorldCom, the market takes care of them. They're thrown out of the marketplace. Nobody will do business with those people again. But remember that politicians, in my worldview, they're purchasing votes. And votes is their currency. So, company have, this is all a good idea though. This is where you come in when you go to a company and you say, oh, the company has effective internal controls. Auditors must evaluate them. Auditors, these are outside people that come in and go, okay, what are your internal controls like? Violators reach harsh penalties up to 25 years in prison. This is bullshit, because there's not a CEO in the world that wouldn't say, I didn't know this was going on. It was them. Now, so that has no teeth. It's just rhetoric. It's just talking. Auditors' work is overseen by the PCAOB. PCAOB. This is a joke. I don't see them doing anything except co-signing. For example, I'm pretty sure Amazon is I'm not pretty sure. I'm sure that Amazon's a Ponzi scheme. And it'll probably go down. If we have a good recession, it'll collapse. And then maybe somebody will buy the pieces. And I'm not saying it's not a good idea. I love Amazon. But their income statement is phony. Okay? Now, the SEC doesn't seem to have any problem with it. Right? There's whistleblowers out there who are going, hey, wait a minute. You can't use all these capital leases and expense all these things that you actually own. So, am I a kook? Well, maybe I am. Committee of Sponsoring Organizations. The Committee of Sponsoring Organizations lists 5 ingredients of who are these people? I don't know, either the Club of Rome. COS lists 5 ingredients of internal control which add quality to accounting information. This is just a metric. This is sort of the way the academic world looks at this. You can look at it this way. It's a good framework, for doing something. That's what you learn in college. You learn, hey, I learned this framework to look at, internal controls, and it was a useful framework, so I'm going to use it. And you can think, SWOT works. I mean, if you take Psychology 101, I like the 5 trait model, right? There's basically 5 personality traits that come through in testing. People who would take psych are like, yeah, okay, that's Rogers, I think, came up with that. But it's just a framework. Do you want to use it? Yeah, it's a good tool. Control environment, risk assessment, control activities, information and communication. And of course, afterwards, monitoring. That's where and we're going to go through each of these if you don't really understand them. These are common to all companies, according to the authors of this textbook. And I agree. I think these are good. It's a good reference. Establish responsibilities. Yes. Who does what? Right? Right? This is, if when you start a job, you don't know who your immediate boss is, who you report to, they don't have a flow chart of it. This is a flow chart of hierarchy. I happen to believe the world is made up of hierarchies. I think that's correct. If you get to a company and they say, oh, everything's around, like Zappos, the shoe company, that guy's dead. Unfortunately, God bless him. He died of addiction, as far as I'm concerned. But he wanted a round table where everybody had the same amount of power in the company and the same amount of power is a bad word. They had the same amount of the same level of dictatorial or control of employees or whatever or departments or whatever. Power is an overused. I hate to get into that discussion of power because it goes into critical theories, and critical theories are really flawed, and I don't want to get into Derrida and Foucault and everything's about power. It's not. Everything is about merit, and you get to a place in the hierarchy because of merit, because you're good at something. You're good at organizing people. It's not just because you want to dominate them. I think that's absurd. Most people in a meritocracy who are at the top are like, oh, I am so sick of being up here, you know. I just want to be down here again, you know. I've had that feeling, you know, many times. So establish responsibilities. If you don't know where you are in the hierarchy, ask somebody. Maintain adequate records. Ensure assets and bond key employees. Bond means insure. Ensure. Separate record keeping from custody of assets. That'll make sense in a minute. Divide responsibility. Apply technological controls, cameras, and software. Perform regular and independent reviews. That means bring people in to review. Tasks should be clearly established. How many times, especially if you're at an entry-level job, you know, if you're young and you get to the job and like no one showed me how to do anything. Nobody trained me. Remember that remember what it was like when you're a manager, because most of you are going to be managers. Tasks should be assigned to one person. We can then determine who's at fault. You can't, you have to establish responsibilities in order to then figure out what went wrong. It's just logic. It's logic. If everybody's wrong, you can't fire everybody, And there's a way to fire people that's deeply spiritual. Don't think it's bad. It's not. Some of the people I fired went on to really great careers, having learned, whatever I had to offer in that firing. Protect assets. Maintaining adequate records. Protect your assets. I made my bones at the what the hell was it? Breakers Hotel. Breakers, Florida. I went to the Breakers Hotel. They asked me to, or I interviewed for equipment manager, right? I could turn wrenches, and it's a glorified mechanic, right? They had 3 shops, 3 golf courses, a big hotel, 1,500 rooms. Looks like the Hotel Colorado, only much bigger. 26 departments with vehicles. They catered all over the place. They catered in Miami, all over. And what did I do? It was great. When I walked in there, I was salivating because literally the place was such disarray. This was 2001, right before the planes hit the buildings. August. I showed up there in August in 2001. First thing I did, now software was just getting off the ground. It just so happened that the hotel was owned by Keenan Oil, so it was sort of they could have lost at the poker game. They didn't give a damn about it. It was a very small asset on a very big balance sheet. Does that make sense? So I went in there and it happened that I knew the president. He was from New Rochelle, New York, and that's where I was born, and right outside of New York City. And I said to him, "What do you say? I get your equipment organized to protect these assets, right? First, we got to find out what we have." It was crazy. They didn't know what they had. No one had kept there was no central record keeping for capital assets. Each department was kind of winging it, 26 departments. So I came in and I said, listen, why doesn't my department, which was called at that time vehicle maintenance, right? And why don't I take over and the asset management? They said, sure. So I created a job for myself immediately. And then I got him to buy some software, and that was really tricky because there wasn't a lot of software out there in 2001. But I wanted to take him into the computer age because I saw it coming, right? It looked like that's where everything was going, and so I did. I bought this piece of software, and I went around that property with a clipboard, and I wrote down every serial number on every piece of equipment. There were hundreds of golf carts. There was like 1,300 of them. of just golf carts. People drove to, the painting crew had their own golf cart. Everybody had golf carts, So anyway, the bottom line to that was, in the first year, I found $500,000 in savings. Right? I found a bunch of waste and loss, and I had a big auction and sold a bunch of crap, and it was amazing. It was fun. I had a great time doing it. But I knew from the farm, I had worked on my own farm, I knew that this was very wasteful. Well, they didn't care because they had the money, sort of like that. But so I found them $500,000, and then I went back and I said, well, where's my cut? Right? I asked for a raise, and then I saved them a bunch more in repairs and maintenance because we computerized and did all these things. But we knew where our assets were after that. We knew where the assets to be protected were located. We didn't even know where they were and what they were. So that's just a little story. So pay attention when you take a job, Maybe that's going to be your thing. Detailed records, chart of accounts, right? The first thing you might do as an accountant, even if, let's say it's not your type of business. Let's say I walked in and like I work for, I'm on the board of the hospital over here. I don't know anything about it, but I can walk around and learn, which I'm going to do here now. I'm going next Tuesday. I'm going down to walk around that hospital. I want to see where the assets are. I want to see what they are, right? I haven't been in there because of COVID, and they just asked me to the board during this pandemic. But I'm going to do I said to our CEO the other day, I said, Sharon, I'm going to come down. She wanted to meet me on Zoom and talk about a different deal I'm on the finance committee, and they were thinking about purchasing some assets. And I said, well, I don't know if I'm on the team, but I'd love to talk to you about it and my misgivings. And she said, well, let's get together. And she said on Zoom, and I said, why don't I drive down there? I'd rather do it face to face because that's who I am. You don't know that, but I like to be face to face. And so I'm going to go down there, and I'm going to meet with the CFO, the Chief Financial Officer, and I'm going to meet every tech and every counselor and every person who's got their feet on the ground in that operation. Because I want them to know that I'm on the board and I love them, and I want to keep this ship going in the right direction, and truly I do. And then I want to know what they're doing and what's wrong, right? If I was still drinking, I'd have a beer with them. Then you really find out what's wrong. But anyway, reprinted forms, sales slips, things like that. Systems. Think. When you get to a job, you call it a job, I hate my job. When you get to your job, make it interesting. Figure out where you can be of service, where you can use that noodle between your ears and go, hey, if we use these kinds of sales slips, it would work better. If we did this, we could save, 8 hours a month. That's where the bottom line gets interesting. That's why you take accounting. All right. Assets insured against losses, of course, within reason. Right? Kelly and I do an insurance audit like almost every year. We go like, why aren't we insuring X and why not that? And what are we doing? Yes, your jewelry should be insured. These are things that she loves and they're heirlooms, and you want to give them out, whatever. I have this gun collection, important. It's an asset, Assets should be insured. We don't burn that stuff up. Or should we build, like I build a gun room that's got steel sides and stuff like that, and it's fireproof. And we keep all our, other assets in there. Employees handling a lot of cash and other assets should be bonded. They should be insured. background checks, right? Background checks, that kind of stuff. Purchase against theft, right? Separate record keeping from custody of assets. That's a fancy way of saying if you handle cash, somebody else should be recording it. This is amazing. You go around the country. I've been all over the country. Mostly little crap-ass towns like this one that I love. I just love a small town. But how does the clerk always end up being, you know what I mean? The county clerk or the town clerk, they find out he or she has been ripping off, seems to happen a lot. Let me just say, in my 57 years, it seems to happen a lot. Well, what's going on? It ends up, usually, the clerk is doing all of the work. There's no separation of duties. Person who controls her has access to assets, must not have access to that asset's accounting records. That's the rule. It reduces the risk of theft or waste. So that makes it employees would need to collude, agree in secret. That's a fancy word, isn't it? Collusion. Agree in secret to commit fraud, right? They would have to conspire. They would conspire to collude. Right? But this is why I just love reading conspiracy shit. It's really hard to get two people to keep a secret. I don't know. Try it with your kids. We have no secret. I know I have no secrets from Kelly. I never say anything to Alice that happens on TV. Like, it'll be our secret. Oh my God, I'm always like, that's terrible. That's a bad idea. There's never any secrets. So collusion. So make it so they have to collude, and they won't. Somebody will squeal. There's always a rat. Responsibility for a transaction should be divided. Divide responsibilities, right? I'll open the mail, and then I'll hand the check to you, and you sign it, right? And then a third person will make the deposit ticket out and take that stuff to the mailbox or to the bank. I mean, ensure work of one person acts as a check to the other to prevent fraud or errors. So ideally they don't have a relationship, a personal relationship. Don't do husband and wife teams, in accounting, and that's why, and I think it's okay to date or find your husband at work. But if you work for me, I'm going to be like, listen, you two, I'm going to transfer you out of this department or, whatever, if we had that type of situation. Separation of duties. Cash registers, applied technological controls. Registers make an electronic file of each sale, right? Time clocks are really cool. Most of you don't remember, manual clocks or writing in on your time card. Now it's all done electronically. But people still gig it. When I was working for Sodexo, they would regularly, I would get nasty grams from the district or the region, and they would say, we got to get, we got to do better with our time clock. People are clocking in 15 minutes early and grabbing that overtime and things like that. Unless you have an agreement with your boss. In which case, I've gone into businesses, even that one, and said, I know you're underpaid. This is a big corporation. I'm going to make sure you get some OT every week. Is that cool? And sort of part of a extraneous agreement between a manager and an employee. ID scanners, to get it, we got them here. It's the security here is absurd. It's a waste of money. At CMC, we've got bulletproof glass downstairs or something. No one has taken probability and statistics. Whoever's from the president of CMC to the deans at these colleges and whoever came up with all this security, it's cuckoo. It's like not going outside because you might get hit by lightning. That's exactly what it's like. And I don't need to get into COVID. I already did, you know. We evaluate. You evaluate risk. Evaluate risk. And if you want to, if you're a business student, you should read this book, Against the Gods. It's Peter Bernstein. Bernstein, I think I'm going to spell that right. Peter Bernstein wrote this book, Against the Gods. It's the history of risk, and going all the way back to, you know, the beginnings of civilization, the history of risk and games of probability and all of that. If you want to see what went wrong with COVID, read Against the Gods. It'll be very clear to you very quickly that we made a massive error. That it's a great book to understand. What is our risk? What is the risk that a school shooter comes here and does whatever, you know? Almost zero. It's a number approaching zero. And what is bulletproof glass going to help somebody? No, it's not. But there's a lot of companies that sell that stuff, and I don't want to, you know. What would you pay to feel safe? I don't know. Procedures are followed in independent reviews, right? Perform regular and independent reviews. That's you when you're a new employee. You're going to do that review. You know, it's always good to hire somebody new and go, hey, I want you, while you're checking out this company, I want you to do an independent review of your own and tell me what we're doing wrong. You know, not only does that motivate the new employee, but, you know, it begins that communication at a gut level with your employees, right? And that's what you're looking for. Companies that communicate make better products and make more money and all that stuff. And they do better by their employees and all that kind of thing. Auditors not directly involved in activities, right? You get somebody from the outside looking in. Consultants, that's it. You know, the joke about consultants, that consultants just tell you things that you already know. Auditors evaluate the efficiency and effectiveness of your internal controls. Of course. Technology, you know, we test records, separation of duties, increase e-commerce. You know, you want to do more of that. New evidence of processing, right? This was in your book. You can take a look at that and what goes with it. Blockchain as a control. This is a new slide. I saw this and I went, oh, this is interesting. If you ever want I could do 60 minutes on Bitcoin, and maybe I will one day. Blockchain's a more secure type of accounting ledger which continuously and simultaneously updates and verifies the ledger. And yes, it does. And prevents modification without a detailed record of changes. It can't be destroyed or hidden. Auditors focus on testing the effectiveness of companies' blockchain processes and technologies. That's sort of their argument. Everybody sort of has this idea, which the government has gladly pushed on everyone, is that only drug dealers and criminals use blockchain. No, that's not true, because it's really easy to catch people. They leave a trail. They leave an electronic trail. That's the whole point of Bitcoin, is that it's a ledger. So if you didn't know that, there's a really great MIT OpenCourseWare course on Bitcoin. I suggest it's on YouTube. I suggest you watch it. So what are the limits on internal controls? Of course, error and fraud. You know, don't mistake the two. Human errors is real. Carelessness, misjudgment, confusion. I make mistakes regularly. I think you all know that. But human fraud is intentional, defeating internal controls for personal gain. Remember, and I always give this fraud triangle, opportunity, pressure, rationalization. If you don't know that one of your employees' kids has leukemia or some kind of terrible illness, If you don't know that, I don't want to work for you, because most of the fraud triangle doesn't have to occur if you're doing what you ought to do as a boss, and you find out that somebody under your employee is really pissed off because they don't think they're making enough money. Now maybe they're just a poison in your organization and you need to get rid of them. After telling them exactly why, not just firing them for cause, or you bring somebody in, you go, I cannot have a poisonous person here. You create a certain amount of value and I pay you for that value. But I have to make money because I'm taking all the risk. So if you really think you're underpaid and you continue to talk to other employees like it's my fault, I'm going to have to let you go. Does that sound fair? Opportunity, pressure, and rationalization. I tell myself rational lies. They seem rational to me, right? I'm not getting paid enough, so I think I'll just take that computer over there, right? Does that make sense? Pressure is, my kid's got leukemia. I gotta do something. What wouldn't you do for your child, right? Instead of creating a corporate culture where that person comes to either their EAP, and I'm not a big fan of HR these days because I think there's a lot of corruption in HR. But nonetheless, you go to HR and you say, I'm having all this trouble. We're going to pass the hat. My company, we're going to pass the hat. What I mean by that is we're going to have a GoFundMe or something. We're going to get the money together to help you. Oh my God. So the cost of cost-benefit constraint, right? Cost of internal controls must not exceed their benefit. That's what I'm talking about with, this safety culture that we've got going on here at CMC. There's no benefit to it. All right, cash and cash equivalents, control of cash, effective system of internal control that protects cash should meet 3 basic guidelines. Separate things, right? We already went over it. Cash payments made by check or electronic fund transfer, EFT. Cash receipts are promptly deposited, of course. Cash and similar assets are called liquid because we can get rid of them. We can use them to pay liabilities right away. Cash is currency, coins, deposits in bank accounts, customer checks, cashier checks, certified checks. If you were looking. If you're one of those people who's like, well, how do I do a income statement that's classified, right? What's the order that it needs to go in? Well, it goes in order of liquidity, but all these things are considered cash. Equivalents, short-term, highly liquid investments, we can readily convert them into a known cash amount, close to a maturity date, not sensitive to changes, right? They're meaning a CD that's almost mature, right? And it's a CD with a set interest rate, something like that. Goals of cash management are twofold. Plan cash receipts to meet payments when due. Keep a minimum level, right? In a lot of like in your 401c3, you might call this prudent reserve. What's your prudent? What would be prudent? What's a word like prudent? It's prudent to go 55 on the highway. It's prudent to go 75. Let's say it's safe. It's prudent. It's prudent to wear a safety belt, even though I don't like to be told to do it, right? But it's prudent to do it. It's like many of these laws that I find abhorrent. We call them prudential laws because prudent people would. You don't have to. Fines are higher in the school zone. Oh, everybody knows that schools, you don't slow down around the kids. That's it. It's prudent. So you might say 3 months. Now, what's a prudent reserve if you're running a restaurant? Well, it turns out a year. That's prudent because And now every time we have a disease, we're all going to mask up and close everything down. Well, you better have a year in cash, and you better own your building. That would be prudent, because if you didn't, you're going to be out of business. Does the restaurant business change? Yeah, damn right it has. You know, you can't just wing it and live out of your pocket. But everybody who runs a restaurant knows at some point or another, somebody's going to get sick in your restaurant, and you're going to lose customers. It's going to happen. I don't know anybody who hasn't, has run a restaurant who it hasn't happened to, but maybe there are. Right? Keep a minimum level. Effective cash management involves applying the following cash strategies. Collection of receivables, right? We've got to get that delay payment of liabilities. This one, no. You pay your liabilities in 30 days or close your damn business. We don't delay unless we make terms. We don't just delay out of the blue. Keep only necessary assets, plan expenditures. This was the breakers. We had a whole bunch of unnecessary assets, things that we didn't need anymore, didn't use. Plan your expenditures, right? If you're a ski co, right, when you got to plan for the summer, and invest your excess cash. You know, don't leave it sitting, because it's losing 3% in inflation this year. I would say that number's more like 10%. So you put $100 and you leave it there for a year, you got 90. Cash and receipts and payments. Here we go. None of the people involved, this is over-the-counter cash receipts. Over-the-counter, OTC, right? You get, this is you getting paid if you ever run a cash register. The clerk rings up the sales. Then there's a cash sheet that goes to the cashier department. And then it goes down. Cashier prepares cash records, deposit slip, etc. And then the supervisor reads all this stuff and keeps copies and sends both to the company cashier, who pays, right? So now here we go with petty cash, cash register, and the record of cash receipts. This is petty cash is coming up. But what happens if you're over short? I heard a rumor. Somebody told me in a classroom like this a couple of years ago that Walmart doesn't care if you're $5 over or under. I should say under. $5 under on your register at the end of the day. I find that hard to believe. But nevertheless, you might be cash over short. And this is the way you journalize that by going 555. So your sales were actually only 550, but you had an overshort of $5. That's great. You know, what do you do with that money? And I don't know. You try and find out who you took it from. Sometimes errors in making change. You got a short. Here's how it looks in the general journal. Cash 621, we were short 4, and the sales are 625. We were short 4. Somebody got the wrong change. Cash receipts by mail. 2 people are assigned the task of opening the mail. I remember most of the people that came up at Sodexo were foodies. You know, they would get a management position having been a chef. So they didn't have any training like this. So I'd say to them, come in, I'm going to open the mail. And they'd say, oh, you open it, Jimmy. I trust you. It's not a matter of trust. It's not a matter of trust. It's a matter of procedure. Right? And P.S., the procedures are there because I can't be trusted. So what we got to do is the 2 of us open it together. I say, you see what we got here, right? The cashier deposits the cash in the bank. Record keeper records the amount received. Now, did we do it that way? Yeah, the general manager made the deposits. He always liked to get out during the day anyway. It was an excuse to get out. So it worked out good. Control of cash payments important, and most large thefts are for payment of fictitious Invoices, we made a fake invoice, paid it. Require all payments to be made by check. Limit access to accounting records except for those who have authority to sign checks. And then have a cash budget. Cash receipts, cash payments, have a budget. We're going to go over budgets at the end of the course, I hope. Voucher system establishes procedures for verifying, approving, and recording liabilities for eventual cash payments. Checks for payment of verified, approved, and recorded abilities. That's a system of control. When I ran into this system at the Breakers Hotel, I thought, oh my God, what a waste of time. I was used to working on my farm or, trading stocks for myself, the great me. So I didn't get why we would do this, right? Because look at all the people involved: the cashier, accounting, receiving, supplier, purchasing, requesting. I bought like spark plugs for one shop, 1,000 spark plugs, and they honored it. But I got a call from the hotel, from the big office. I went down there, and the purchasing agent said, "What are you doing?" I said, I needed spark plugs. And he said, "You don't just buy spark plugs. I approve it." Like, you approve it? What do you know about for spark plugs? He doesn't know anything about spark plugs. He said, "It doesn't matter. I approve it so that you don't steal." And I'm like, "Oh, okay, I get it." So I streamlined it as best I can. I planned my purchases so that I could get approvals when I needed them. This makes for excess inventory sometimes, but you gotta run it the way you gotta run it in order to minimize theft and fraud and bad accounting. Petty cash fund transactions. This is fun. Everybody's got a safe with a little bit of money in it. Shipping fees, minor repairs, low cost supplies. That's what they call it. To establish the fund, I'm gonna put $50, or in this case, $75 in the safe. All I'm doing is I'm swapping assets here. We've got cash and petty cash, right? They're both on the assets side of the equation, right? Debit, credit, minus, debit, plus, credit, minus, right? So we're just gonna go, we're going to credit cash 75. We're going to debit petty cash 75. Clear as mud. Got it. Easy. And then here's all this stuff that we used our petty cash for. You used $71 of petty cash last month. Maybe we need a bigger one. It's November 5th to November 27th. Tile cleaning and office supplies and whatever. Beer. So we're going to replenish it with cash, $71.30. That means we had $3.70 remaining. So the petty cash payments report is used in making a journal entry to reimburse the fund, right? So that you can tell what happened. Are we using too much petty cash? I don't know. We'll see. Increasing or decreasing in petty cash fund. You can add $25 to it in this case, right? So there's another 25, or decrease it, right? Decrease it, because you don't want to have too much cash laying around. It just doesn't, when they say don't leave your keys in your car, there's a reason. You don't have people steal. You don't want to give them make that rationalization of, well, they got plenty of cash in there. Or like we did, I had a bunch of cash. We started, we started being in advance on people's paychecks. They say, I need $20 till tomorrow or whatever. Don't get in that rat race. Petty cashier fails to obtain a receipt or overpays, cash short will result. Petty cash payments. So we have this $200 petty cash fund, and we were short. What was it? A shortage, the difference is debited to cash over and short, and overage, the difference is credited to cash over and short, right? Cash over and short. right? 178 in receipts. We're $7 short. So we do cash over and short. That's like a temporary account. $7. Look at all these bank services. Banking, and if you're a libertarian like I am, fractional reserve banking is fraud. But you'll get into banking when you go into different parts of different courses. You can bring that up. Make sure you raise your hand and tell whatever prof is lecturing on banking and the Fed and say, Mr. Cleaver said that fractional reserve banking is fraud. But anyway, we've got these bank accounts and checks and electronic fund transfers, deposit tickets. All these are basic services, that you pay for. You pay for these services. Here's a deposit ticket, Video Buster. Lists cash and checks along with the amounts. It serves as proof of the deposit. Last place I worked, we had triplicates. One went to the bank, one went in the file, and the other one came back from the bank with me, right? And got matched with the one in the file. Used to withdraw money from the bank is a check. Includes the maker, signer, payee, and payer, right? The maker is Video Buster. The payee is Hillcrest. The payer is First National. They're going to pay, right? And they're going to pay it to Hillcrest Lighting. So pretty simple there. Now, here's your bank statement. This is where we're going to do something called reconciliation. Not like the Catholic version, but reconcile our bank accounts. So you can see we've got deposits and withdrawals and a balance over there. It's all done electronically now. Usually once a month, the bank sends a depositor a statement with the activity on the account. And this is how we prepare a reconciliation. Bank reconciliation is prepared periodically to explain the difference between the cash reported on the statement and the cash balance on a company's books. Okay? It's a big thing at the end of the year when you do taxes. You get these the last bank statement and you reconcile the bank to books. So here's the one you want to print out for your homework. Bank balance adjustments are here, and book balance adjustments over there on my right. Add interest earned, subtract bank fees and non-sufficient funds, add or subtract corrections of bank errors. And on the bank balance side, add deposits in transit. Right? Remember, we're going to stop the music. Remember, it's like December 31st. Right? Right? So if we made a deposit, let's say that's a Thursday, and we made a deposit, and then we closed the books, and it didn't make it to the bank because it was the holiday, we got New Year's Eve and all that crap, and so we got to do something about that. Just like making adjustments for payroll and insurance and all the adjustments you've been making to reconcile the books at the end of the accounting period. Well, we've got to do the same thing with the bank and get everything reconciled. So here's another one. The balance of the checking account reported in the bank statement rarely equals the balance in the accounting records. So the books in the bank statement have discrepancies, and this lines it up, just tells you how to do it. It's pretty simple. And there's 4 steps involved. 1, 2, 3, 4, right? 5, 6, 7, 8. 1 through 4 of bank reconciliation. We've got the balance. We add a deposit. We deduct these outstanding checks, right? Somebody's walking around with those checks in their pocket, or they just haven't been down to the bank yet. And then in the last 5 through 8, book balance is $1,405. We add a note that we collected, interest earned of $8. Then we have some charges, $23 for printing new checks. If you've never had checks, maybe you don't know what I'm talking about. Uh, you got to pay for your checks. When I was a kid, you didn't, but you didn't. And there's no interest to be made anymore, so you're paying for everything. Non-sufficient check and non-sufficient funds, NSF. Means somebody didn't, you deposited a check and it bounced check. Okay, so here's the entries for a bank reconciliation. The only items reconciling the book balance required, and obviously, only the book adjustments need to be, journalized. So collection on the note, the interest earned, the check printing, and the non-sufficient funds check. You can see, in the case of a notes receivable, cash is debited to increase it. In the case of interest earned, cash is increased, debited to increase it, right? Okay, and now as with every chapter that we do, we've got this compute the day sales uncollected ratio and use it to assess liquidity. Well, what does that mean? How much time is likely to pass before we receive cash receipts from credit sales? Well, this is a really important number if you're Costco, right? Or in this case, I don't know why they keep using Jack in the Box. I haven't seen a Jack in the Box in I don't know how long, but there it is. What are their receivables? 879. Their net sales 26,509. That's billions. That means they're 12 days. A little higher than a year ago. How come? I don't know, COVID. Right? I mean, is that why? Maybe. But here's the equation. Accounts receivable divided by net sales times 365 gets you to that 17 days uncollected. Hey, their trend is down. That's good. Right? You want to collect on your sales as fast as you can, right? And that may have something to do with terms. Remember, 2%, 10. Maybe you need to make better terms to collect quicker. Documentation and verification to control. This is just, when you saw that filing cabinet I showed you with all the tabs in it, all the different things that I had to do at the Breakers Hotel, and I thought it was all annoying. Well, I just want to show you this again. And especially if you run into it in a corporate level. Or you want to implement this because your company is grown enough where you're going, hey, we got to get a handle on this stuff. We're not communicating well. We're not documenting well. Usually a controller or a CFO will come in and go, we got to do something about this. Invoice approval. The accounting department will record purchase and approve payment after all the documents are in order. CMC famously could not do this quickly. So at Sodexo, we were on like 40 days, and then we were on 60 days, and I was like, what? They couldn't figure out what department did what, catering and all that. And I had more than one meeting where I went, I don't care, pay us. Then figure out your internal problems. So that's my rule, and it's a moral one, not an ethical one, a moral one. Pay your bills, then argue about them. Wow. No, I want to argue about my bill. Well, pay it first. Huh? Big risk. But still, you owe the money. It's not yours. Especially if you're some mid-level accountant and you're not, whatever department it is not sending you the invoice over quick enough, your source document. You pay the damn bill anyway and figure out your internal controls afterwards. Because you basically, that's stealing to me. You have someone else's money for longer than you need to have it. information across all documents are verified. Invoice approval, also called check authorization, checklist of the steps necessary, right? It's all a big thing, you know, and new accountants can get really wrapped up in this. And then somebody like me is on the other end of the transaction going, why haven't you paid me? And the answer is always the same. Well, I haven't gotten all my source documents. And I'm like, I could give a damn about your internal control problems. Pay me. You know, so enough of that. Voucher is complete. It's other people's money. It's not yours. Vouchers, after they've provided goods or services, you owe them the money. Vouchers complete after the invoice has been checked and approved. The vouchers used to authorize recording obligation. Certain information is required on the voucher. It's all great, you know. Again, the takeaway for you is have a system, stick to your system, right? And when you go somewhere, the first question you want to ask is, if they say, do you have any questions at your new job? Say, yeah, who's in charge of procedures and what do internal controls look like? And whoever it is that is interviewing you will go, that's a really good question. Thanks for asking. And maybe they'll say, you just made yourself in charge of that, or something along those lines. But nonetheless, it's always an intelligent question, you know. How are your internal controls? So, okay, I think that's it on chapter 6. And what I think I'm going to do here is end this one. Boom. And then I'm going to go over, it's about 2 o'clock. So I think I have 2 hours of recording here, which is enough, or an hour and a half, maybe. It's 1:45. So I only talked for an hour or so. It's 1:51. Oh, that's way off. It's almost 2. The market's going to close. So what I'm going to do is I'm going to take a break and do the P&L with my old man on my day from here. And then maybe I'll fire it up again and do a lecture on chapter 7. So bear with me. And then I'll, down in my office down in Rifle, I'll sit with my little software down there and do problems with you. Again, reach out to me anytime, 309-1899, text, call, write, whatever, and I'll help you out, or I'll meet you somewhere and we'll work on this stuff together. I'm happy to have you stop down and see me in Rifle or whatever you want to do. Okay, well, there's the phone. Thanks very much, and we will talk soon.